Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Wednesday, the second day of March. First day we saw lots of flows. Basically, everything had an expansion type move. Market's been trending higher ever since that double bottom that we saw back on February 11th. The tactical bulls have been in control. And people are starting to say, where are the intermediate bears? Where are the structural bears? And the reason why they're saying it is because, it feels right now, everything always feels good when it's going up, until it doesn't. So the question is, when do they start to, meet? So I want to just show you real quickly on the S&P why people continue to, be careful here, thinking that this, could have a similar result. Because if you remember, here was, 2007, 2008. Okay, this was the structural breakdown that we had pretty much here. For the first time, getting down to the 200-day and breaking this 21-day moving line, and then this was your rally back. The rally back came all the way up, pretty much to where we broke down from. Okay, and then from there, I guess you could look at it like this. You had this bear type flag ascending channel that went below the 200-day, retested it and failed, and boom. Now I don't know if we're going to have the same type of result here, but if you want to look across the bow, here. A lot of guys could say too, you had this, well, I guess you could do this one actually from here. This is still intact. Okay, from here is where I guess you have your intermediate trend break. So if this is following the same type of structure, okay, where they took the the bears out to the woodwork until finally reversed down, here we are, going across here. This is basically where we broke down from. Okay, and all we've done so far is, bounce off the 200-day, which is pretty much what happened here, and have had a nice rally since with double bottom here, double bottom there, but I'll get into that. So really, if you look now a little bit closer at this, because we'll just get you a little closer so you could see, here is, the spot. This is really about, 2033-ish, which would be somewhat similar to what happened here. But I don't particularly think we're in the same type of environment, if you come back to me, we were then. But there's definitely some similarities. I don't think that our, obviously our housing market isn't as leveraged as it was back then. We don't have the CDOs, we don't have the craziness, but there definitely is some banking problems in Europe, and definitely some banking problems in Asia. And, right now we're in relief rally mode. So we'll see how that continues, and we'll try and do a play-by-play here on when, do things change tactically by running into the intermediate, bears. So let's go back to the chart one more time. So basically there still is some room into this spot if it wants it. So let's go to the daily chart, because this is what we navigate. You go to the daily chart and you'll see, I tried to outline for you guys, this, this double bottom from last year that had very, similar, type of structures to this one, where you had your low, you had your red dog reversal double bottom. Here is when we reclaimed, okay, the 8 and 21 day, which is 1960. This is when you took out resistance, and it followed this 8-day moving average all the way up. A lot of people got very short here and didn't make any money on the rally. Then finally broke below, lower high, got a little wishy-washy, and then this wedge type pattern broke to start the year. So here we are. Let's go back to this quote unquote double bottom ish. Double bottom. And here was, your 1812, here's your 1810, your 3 up days. This is basically when it came into resistance, couldn't get through right here. Okay, so it had to come in first. This is when you had your red dog reversal, pushed through, held the 8-day expansion day. So now, the question is, if you remember these lines were from the macro spot. So this macro spot comes in around 2025 or even a little bit higher to 2060, and then you have the 200-day leaning down at 200. So here is, tactically, your next spot of short-term resistance, which would be right here. And in order to get there, we'd have to get through 1978, and in order to get through there, I would think moving forward, now this little peak here of 1963 probably holds. At this point, we're extended again from the 8-day moving average, which it's better to buy here than to buy strength. But we'll see if there's another day of follow-through. Yesterday I tried to keep guys from getting too short on the brain, because similarly here you had this resistance where you broke above, came in, everyone got short here. okay, on this move thinking it was over, and then you had a wide range bar that knocked people's teeth out, then it held and it continued. So, you know, I said don't get stubborn yesterday. This could be similar where we came into the 8 day, everyone's getting short saying party's over, and boom. So there you have it. So support 1's 1963. I would think that that would hold. And then, you know, maybe not today, but, you know, tomorrow, Friday, the jobs report, maybe it pushes through and you see that. It'd be better, you know, to hang a little bit. So yesterday you probably heard a lot of talk about how many sectors took back the 50-day in other spots, which is chart-wise healthy. You know, you get above it, you push through it, shorts have to get squeezed again, and then you see where you can go and see if you can hold it. So let's just go to a few of those charts. The Qs, nice move yesterday. I did not play the Qs. I played some stocks in the Qs, but it cleared this resistance. What did it do? It held the 8 day. It's looked what a quinky dink above the 8 day and 21 day. And then, you know, massive resistance starts coming in around 107. So we'll see what the story is there. I would think that, you know, this spot, you know, holds digest for continuation if that's going to be the case. You know, look at again the rally here above the 8 day the entire time before finally, you know, getting its little tight pattern here with the gap and go to start the year. So we're coming right back into that zone. So this zone is not that compelling to buy. So, you know, some guys aren't doing anything. They started not doing anything here because they're like, oh, I don't want to, you know, look for quarters and 50-cent pieces and get ran over by a steamroller once we just get crushed. But look what happened here. Like when this happened, you know, you didn't get crushed right away. It actually needed some time to develop and get weaker and charts starting to fail before rolling down. So, you know, until this 8 day and the 21 day really give way, try and look for some opportunities long, you know, versus just trying to short. The Russell yesterday also wound up getting through the 50 day. If you remember last week, late last week, I'm like, I think there's another trade here. I posted the chart on Redler All Access and in the main Twitter where here was your 4-day move. This was your first really nice trade when it held 99, giving you this red dog reversal. And then talked about if it takes out 102, we should see at least a move to the 50-day, which it actually closed above. And now it seems like it's, you know, on its way towards this you know, 107 to 108 area to fill that gap, and could be a little bit higher. So the Russell has been acting better, so just don't have short on the brain there. It's above the 8 and 21 day, and you know, it started acting better in here. This was a nice tight area. This wide range bar helped give you some clues too. So we'll see now, you know, how it wants to navigate. It might not just have another strong day, but I would say now short term here, right down this high, which is 104.03. 104 holds-ish, then above this, and it can continue. And that's kind of like my thought today is, you know, can we hold and digest and have an inside day and see if there are some stocks that are more powerful enough to trade through yesterday's highs and give you some continuation for some cash flow. If you go to the banks, the XLF, look at that move above this little zone. Boom, nice and clean. So, you know, I would look at some of the other banks, like not the XLF, but the banks, like the XLF is at the 50-day. So let's see what maybe has room to get there. So that's my thoughts here. Like with JP Morgan, it's basically right there, and this is deemed the strongest bank. Gave you a big wide range bar. I went over this chart yesterday saying if it gets over 57.20, could be a good buy. It's only back to resistance. So I would say, you know, this one, you know, have on alert, because if it starts to clear this, it could, you know, give a bit more room to the upside, and then it could also start to get some squeezes in other names, because the other ones have room to their, you know, 50-day. Like Goldman Sachs just, you know, had a first decent day, took back to 21 days. So if it's off 50 cents with the futures, maybe it's buyable, gets through this little spot, and before all said and done, you might be able to see the 50-day. So a little room. So that's what we're trying to do, measure out how much room you have for a trade before it meets resistance. So there's about $5 here in Goldman Sachs before massive resistance. You go to Bank of America, which is a lot more broken. You look at where its 50-day is. You look how far it is from there. So this finally had, you know, a clean day above this small spot, and you know, 50 days all the way up here. So if it wants to, if the market wants to rally for a few more days, this is $1. That's a pretty big, you know, percentage move too. So you know, if Bank of America is off a little bit and you feel like, you know, trying to have some, you know, a little bit of a bank in there, that could happen. Let's see what Morgan Stanley looks like. Morgan Stanley is closer to the 50-day. 50-day comes in right here. So you have JP Morgan the closest, Morgan Stanley the second closest, Goldman the third, and Bank of America last. And I guess let's look at Wells Fargo. Wells Fargo, not a lot of guys trade. But yeah, it hasn't really been doing anything much special. It engulfed this day and has room to there. So the banks seem like, you know, they're obviously not leading because they'd be above the 50-day like some of the sectors already, so they're lagging, but they want to play a little catch-up. Maybe people are a little worried that the Friday jobs report might be, you know, not horrendous and, you know, a little tiny bit more hawkish, and then that keeps the banks going. So we'll see there. A different laggard sector also is the bios. The bios have, you know, not, you know, acted well whatsoever, but woke up a little bit yesterday. So you want to see maybe if we have a you know, inside type day, does this get you another trade? You have a tight little pattern here in the IBBs, you know, this was, you know, your support, which it held, and now it just took back the 21-day, and the 50 days all the way up here. And I'm not thinking you get up to, you know, 286, but you know, it clears yesterday's high and clears this. Maybe there's a little bit of room in there. That's all I'm looking for, is a little bit of room. So, you know, perhaps this, what is this spot? This is 261. So if it could hold this 261, you know, it takes this out, see if it clears that, and maybe there's some room if this is going to last for a few more weeks and not just fail. Last time, when it looked like this was going to play catch-up, it failed fast. So you just don't want to make sure you get caught there. Maybe looks at some vehicles within there. CELG, you know, had a decent day yesterday. So maybe if you're looking at individual names to see what can carry it, CELG looks, and I guess, doesn't look like much, but from here, maybe it could move up a little bit before it reaches this, you know, big downtrend of lower highs, which comes up there. Let's see what GILD looks like. GILD, also broken, not really doing much, but it's in this range. What's AMGN doing? I think the AMGN was down a little bit. AMGN still below everything. You know, these things just don't look so good. What about like JUNO? What is JUNO doing? JUNO, yeah, look at this. JUNO had a day, a little more of a little beta bio. So, you know, maybe that's a clue. Let's see, JUNO has resistance here. This is basically where it broke down from. Yesterday was probably the day to buy it, though. What's KITE doing? KITE. Yeah, KITE had a day. So, you know, look at JUNO and KITE to see if there's any kind of continuation in these trades to the upside. You know, here's when this had a clean break, lost the 8-day. Just a very good, you know, example of something that's above the 8 and 21-day, not a short. You continue to try and buy it. You know, here's your outside day. Never got back above that outside day and then broke this ascending channel. So day one out, or at least get out here. Might have hurt if you were long it and you said, oh, I don't want to really get out, but you know what, when it broke this 21-day at 80, a lot better than getting cut in half all the way down. And what did it do this time? Below the 8 and 21-day the entire time. So above, risk on, don't short, try and be safe. Little clue, maybe something's coming bad. Here's your break, here's your confirmation of the break. You get out of dodge, and now nothing until here. So that's a good example of just how to use those moving averages to navigate your position. But this is a pretty engulfing day, so it looks like there may be more there. Saw some guys talking about ZIOP. How does this thing look? It's crawling back up. Maybe you could see 910. Let's see XON. XON, tight. You know, nothing great, but I guess if something were to be a big catalyst here above this 34, 35, and it could go. You know, so the bios, you got to be careful with, but you know, they're worth just somewhat looking at. You know, yesterday, where guys made most of their money was high beta tech. High beta tech, during that first hour when they tried to pressure the futures, did not go down. Amazon, Google, Netflix, Facebook, they all held in there. I was actually trying to short Facebook and it wouldn't go down. So once we finally went, I bought the spiders, I bought Facebook, you know, I bought Google, you know, and Apple actually. So they wound up all having good days. So the question is, can they get another? Amazon was upgraded this morning. It's up a little bit more. Where's the 50-day? The 50-day is right here, 586, $7 higher. So see how that reacts there. Here is your, you know, bull flag, consolidation, boom. So we'll see if it gets to there. Google also had a good day. Google, you know, cleared its inside range. This inside range has been governing it for a while, and it just poked its head out, and I think it's flattish. So maybe above yesterday's high, you know, it can continue. I would think that there's a room to perhaps this 760 zone. It did have the best earnings. You know, obviously it failed here at 800 and came in hard, so it's trying to repair. So here's your day one, maybe a little sideways action, takes this out and goes. I would watch to see what happens. You know, there was some news about Intel and with the government or taxes, IRS, on how they're treating their stock options. And if Intel wins, it could be some kind of $3.5 billion windfall for Google. That probably would help the stock. So keep your eyes open for that. That's, I think, happening soon. I don't know when exactly. Netflix did also wake up yesterday. Still, not much continuity here. You haven't had 2 great days in a row. Like, this was 2 good days where you had your reversal, and then at least, it opened down a little bit and gave you, another day through here. Then you had 2 down days, and let's see if we can get a second day above this. Okay, and this is 99.16, and then here's your 50-day at 101. So we're looking, I guess we are looking for quarters and 50-cent pieces to perhaps get ran over into resistance, but we'll see. Apple, first day Apple had in a while. Apple, I think I put in my morning notes saying if you can get over 98 with some authority, could finally get going. So that's why I'm long Apple for the first time in a while. Broke this little, descending channel here, wide range bar with force. I would say, you would think you can get another. And if it does, the next spot here is 101.50. So that's about 80 cents. And then if it really wants to, continue up to the upside, perhaps, this 104 to 105 area is your next spot. But we shall see. The 8 and 21, they finally, got curled into each other. Volume was tight, and boom, or not volume, just the range was constricted. So we'll see if there's more. I would think that, for anybody to stay in it, like if this breaks back below 99.20, I'll get out. But perhaps even add here for a move up into that, the mid 101 areas. What's Microsoft doing? Let's check it out. Yeah, Microsoft had a decent bar yesterday. Has a resistance pivot right here. So see how it clears that. Right now for flattish, if we can get above this with some kind of authority, maybe you get some continuation. But again, look how choppy this is. Maybe holding a little bit higher here would be helpful to get that pivot cleared. But you're also going to need heavy volume for that to happen with Microsoft. It's huge and thick. And then in social land, Facebook's been just grinding higher. It was a vehicle, like I said before, for me. Maybe it gets 2 days in a row. You haven't had 2 days in a row in a while. You actually, you 2 days up, 1 down day, buyable. 2 days up, top on the 3rd day, 2 down day. Yeah, it's, yeah. Anyway, above yesterday's high, perhaps it pushes a little bit more. It's been riding the 8 and 21 day. It has this ascending channel here and just continues to ride it. So better to be buying into it versus anticipating a break, and losing. So we'll see how it reacts today. Remember this little topping tail here, that red dog reversal that gave you some clues to be out of this. Well, anyway, it's had a nice move since. It's just a matter of how much longer it could last. Twitter and LinkedIn didn't really do much yesterday within the rally. Not much to say here, I guess, on Twitter, except for if it doesn't hold 1711-ish, I'm sure anybody who is playing for this as an oversold bounce that got it here would be out of the way. So 1711 comes in right around there. So, I don't know if it's worth shorting. We maybe make some peanuts if it does. But either way, that's your spot there on Twitter. Bob has been really good to Sperling and some of the guys. We talked about how you had this pro gap right here to be long versus it. Well, never really came in and filled it at all, and now boom, boom, boom. It's now opening up with the strength in the Shanghai. The Shanghai was up 4%. This is when it got rejected on earnings. So here would be a spot that it will be probably pretty tough to get through. So if you're long it and you've been riding it maybe from here, then I'd be a seller probably into the 73 area versus a buyer the first time there. Then you had, Citron out on Tesla yesterday, and it didn't really get crushed, but we'll watch to see what happens with it tomorrow. If the market's kind of flattish, maybe they will be able to get it back below yesterday's low. Yesterday's low is 182.70. It's had a big move from 140 into resistance, so made some sense. I think guys were even shorted because it was relatively weaker before Citron came out. Now we'll see if this holds or not. So if you're looking for a short, see if if weakness comes back here. Disney, some guys are just saying go over Disney. All right, well, Disney had a tight range, broke above it. We'll see if it wants to continue. This is a nice day one above a big range here, so you would think it can get a little bit more in there. And lastly, the other barometers that everyone watches, gold and the TLTs. Gold got hit early. I got stopped out of my gold. but it didn't fall apart. It actually held in pretty well. So see if, with that being said, with the Dow up 300 points, people would have thought gold could have gotten crushed, and it didn't. It's still above the 8-day moving average, so if you're really tight like I am, especially with gold, use this as your stop. But it could also see the 21-day and still be fine and just mean that it needs more time. But you have to respect this. Look, 8-day moving average closes below this, it's going to pull in a little bit, so you want to be careful, because if guys didn't do that with the TLTs, they got hurt, because TLTs, same kind of thing. Ran and held the 8-day the entire way. This, exhaustion, red bar, sell. Came in, held the 21-day, lower high, held again, and then broke. So hopefully, you're using technicals with this besides just, talking about it and ranting about it, because you can use charts to figure out how to manage the TLTs. And at this point, you had a sell signal, another sell signal. Here was your press. And now I would think if the S&P wants to go towards, 2,000-ish, maybe this works its way down to here, and this could be your, buy the dip at some, particular point. So let's take a little bit of a snapshot of that. So in closing, today is hump day. It's a Wednesday. You just had a big wide range expansion bar. So today could be a little bit more quiet. I don't think we fall apart, but they could probe a little bit down to that maybe 1963-ish area or not. If we trade through yesterday's high, maybe some of these high beta names give you a little bit of follow through, but then be careful, there's a lot of resistance above. So if it pushes through the pivot and you make money long and you see them stall and comes back below the pivot, you know what that means? It means get out. It means momentum is not ready to sit there at those highs, and some might even short versus the morning high. And then we'll see how it plays out. You still have jobs Friday, new flows are still coming in, overseas markets were strong, Europe's holding their gains. It doesn't seem like this market wants to give up right now. We have a 1030 oil number, so even with oil down from 430 number, we're not falling apart. So, just be a little bit more flexible versus just short on the brain or not. So I'll see you at the recap. Have a great day trading.